was just looking at another excellent presentation on Daily FX. The URL is in the description below the video. The general theme being about discomfort with the markets at record highs. So he looks at many plots. So I'm just looking at one, and as I said, the link is in the video below, and I suggest that you have a look. In short, here he's looking at the S&P, which is the dark blue one, and the financial stress. Well, he actually inverts it. So that's the light blue one. The reason he inverts it is so that when the stress shoots up, the stress inverted shoots down, which is what the markets would typically be doing. So that, you can see the correlation between the two more clearly. So here's the point. This time period, end of 1989 to about now, includes the dot-com bubble and the banking crisis, I'll call it, the 2007-8. So we can see as the markets shoot up, actually we had a financial shock or financial stress jumped here. So it's inverted. So when the stress level goes up, inverted falls. And the markets fell during that period. And, if it was, say, 1200, it fell maybe 20%. So, it's not an insignificant fall, but it's not a 50-60% fall, which is my takeaway. That. So, yes, when financial stress is high, markets normally fall. But it doesn't mean it has to fall, 50-60%. So here, the financial stress was very high. The market fell a little. Not that 20% is a little. So here, normally when the markets are not stressed, the stock market can work away, jump up. Then it fell again. What's this? I suppose this would still be the dot-com bubble unwinding. But in a way, I'm thinking the dot-com bubble wasn't a financial thing, really. I'd expect the banking crisis to cause far greater financial stress, as we see. But his point here is that at the moment, financial stress is actually very high. Very high. Yet, the stock market is not showing this. Now, I'm only talking about one picture here. He shows 6, 7, 8 different things. So, the stock market against financial stress, stock market against volume of trade, volatility, all kinds of things. So that, you don't want to base your trade on one indicator, one plot. So by having multiple different perspectives, you can be more comfortable that, okay, they're all kind of giving this impression, as opposed to just looking at one plot and going, oh, I can calculate exactly it will be this tomorrow. So the point of putting this up was to say, again, remind people that the underlying signals about the market are not good. Here, the financial stress fell a lot, but the market fell, 10-20%. We've had basically a 10-20%-ish kind of fall here. So, would that be enough for this financial stress? It's not that simple. We don't know. In fact, I typed in Cleveland Fed into Google, to look up a bit more about what this indicator is. And actually, I think I'll do it now. So just going to the web page, and again, I'll put the link in the description below. It says the Cleveland Financial Stress Indicator or Index, unavailable, is temporarily unavailable due to the discovery of errors that overestimated stress in the real estate and securitization markets. Additional details will be made available when posting of the index is resumed. So, strange that, but they're looking into it. That's all I wanted to talk about today. Looking forward to watching the 100 meters and the Olympics in general. Till next time.